Hey everyone, George here. So if you're a contractor doing good revenue but always short on cash, this isn't necessarily your fault. Payroll hurts, taxes surprise you, and profits feel imaginary. In today's episode, I'm going to show you why this is and how to fix it. So let's get started. So if you're new to the channel, welcome. We talk all things accounting for contractors here. So most contractors run their business like this. One checking account, all deposits go in, all expenses come out, and whatever's left maybe becomes profit. And that's not necessarily because you're bad with money. It's because human behavior guarantees failure in that system. So it's like you're eating off a giant plate, and when your plate is big, you pile it high. You eat everything and you feel broke no matter how much food you started with. That's exactly how contractors treat cash in one operating account. The money expands to fill expenses. So there's a behavioral principle called Parkinson's law. Expenses expand to consume available resources. If you've ever said, we had cash so we upgraded the truck, we hired ahead of demand, we'll make it up on the next job, that's Parkinson's law. It's similar behaviorally to having a full tube of toothpaste and squeezing out extra. Empty tube, you take a small drop and it still works. So really this is a behavioral thing I've seen across a lot of my clients, and really just about any business owner it could apply to. When contractors have less available cash, something magical happens. You negotiate harder, you plan better, you cut stupid expenses, and you just become more innovative. So you almost need to intentionally leave yourself with a smaller plate of food or a smaller tube of toothpaste. So we think of the traditional accounting income statement formula as sales minus expenses equal profit. Sales comes first, expenses scream the loudest, and the profits become like an afterthought. So there's something called the primacy effect, where we give importance to whatever comes first. So contractors chase more jobs with lower margins, say yes to bad work, and stay busy but broke. And then you tell yourself, once we grow a little bit more, it'll fix itself. But the truth is it won't. So here's how you have to look at the accounting formula. Sales minus profit equal expenses. Profit is no longer a reward. Profit is now a constraint. This doesn't mean you stop growing. This means growth has to earn its way in. And for contractors, that's huge because growth without cash kills construction companies faster than anything. So what are the 4 core principles you need to follow? Number 1, use smaller plates, that is multiple bank accounts. Your income account is not a spending account, it's a clearing account. Money flows into it, then gets distributed into profit, owner pay, tax, and operating expenses. Same money, different behavior. Contractors who do this instantly stop lying to themselves about cash. That puts them in that vicious cycle. Number 2 thing you have to do, serve sequentially. So profit comes first. So when money hits, number 1, profit gets paid. Number 2, owners get paid. Number 3, taxes get set aside. And number 4, then and only then do you pay your bills. If your operating expenses don't have enough money, that's not a crisis, that's information. Your business is telling you your margins are wrong, overhead is too high, or pricing needs fixing. Number 3 thing you have to do, remove the temptation. Make profits hard to touch. Your profit account should be at a different bank, not tied to a debit card, and slightly annoying to access. Just like junk food, if it's not nearby, you won't eat it. This is how contractors accidentally save tens of thousands without even trying. And number 4, enforce a rhythm so you don't have any more daily panic. So for example, you could use a twice monthly rhythm, meaning you don't check the bank 15 times a day, freaking out after big deposits, overspending after a good month. You know exactly where you stand just by logging into your accounts. The contractors who use this methodology love this because it matches how their progress billing already works. So the number 1 objection to all this is, if I set aside profits, how will I grow? This is the number 1 objection, and here's the truth. Growth without profit is not real growth. Plowing money back into your business isn't profitability. It's deferred spending. The fastest growing contractors I work with know their job types and stick to the best ones. They say no to bad work, they raise prices confidently, and they specialize instead of doing everything. So you don't need to start big, you need to start just simple. Today you can go open 1 new checking account, and ideally at another bank than your usual operating bank. Transfer 1% of every deposit in there and that's it. If you can run your company on $100,000, you can definitely run it on $99,000. This isn't about getting rich overnight. It's about rewiring your behaviors so that your business can become very profitable. If you want to run a profitable construction business, this is definitely one way to go about it. One way or another, you need to put profits first. So if you need help in implementing any of this the right way, how this applies to job costing, retainage, taxes, owner's pay, our calendar link is down in the show notes. We're happy to speak. Feel free to book a time, and see you in the next one.